Fund accounting is a system that divides financial resources into separate funds based on their purpose or source. This provides a clear view of how your nonprofit uses money and ensures compliance with donor and grant requirements. Many nonprofits are required to use fund accounting, so it's essential you understand the basics. In fund accounting, each fund is a bucket holding resources designated for a specific purpose. For example, resources from a particular government grant go into one fund, while donations for a special project go into another. By categorizing resources, you clearly show how each dollar aligns with its intended purpose. Each fund's activity is tracked separately, making it easy to demonstrate responsible stewardship. Whether a donor contributes to a specific project or a government grant requires precise tracking, fund accounting ensures that each source of income is managed according to its specific terms. This is why fund accounting is so important and beneficial. It enables your nonprofit to report accurately to grantors, donors, and stakeholders, building trust and credibility with them. Fund accounting generally involves three main types. General or unrestricted funds can be used for any purpose that supports your mission. Unrestricted funds offer flexibility, allowing you to cover operating expenses, pay staff, or address immediate needs. Funds that are designated internally by management or the board, like operating reserves, are also considered unrestricted. Restricted funds often have conditions set by their grantors or donors on how the funds can be used, and they must be spent accordingly. For example, a grant for youth education programs would be restricted to expenses related to that purpose. These funds help nonprofits meet specific goals set by donors. Then we have endowment funds. These funds have a time restriction rather than a purpose restriction, meaning the original amount or principal can never be spent. Instead, the income generated from endowment funds is used to support ongoing programs or initiatives. Keeping track of resources through fund accounting does more than help you meet financial requirements. It also helps your nonprofit demonstrate its commitment to honoring donor intentions and managing its resources responsibly. This approach builds a foundation of trust, transparency, and accountability that strengthens your mission.
Thanks for watching Kickin' It with Corinne. To learn more about our nonprofit accounting and business consulting services and watch new episodes when they're released, visit jmco.com/KWC. And don't forget to hit subscribe on our YouTube channel for the latest from James Moore.